Hi guys, hope you guys are doing well today. Today is a good day for stock. The stock market is up. Things are doing really well. That is what I would be saying if things were doing well, but they're not. To me, okay, it feels that the stock market is very shaky and unsure right now. And today, that is exactly what we are going to be talking about. We are going to be looking at the S&P 500, Boeing, some of the airline stocks to see just how are we doing in the stock market and how long is this bull market gonna go. I mean, we have had a very good swing up in the last 2 weeks, but is it about to end? Let's see. Let's check it out. Oh, and if you could just pause the video right now and hit the like button, I would greatly appreciate it. Alright, cool. Thank you very much. And now let's go. Okay, so this is the S&P 500, and right now, as of 12:45 p.m. Pacific time, which is 3:45 Eastern time, the S&P is currently up 1.2%. 1.2%. That's quite a lot. That's quite a lot. If you guys can see here, this uptrend started from May 13th. And from May 13th all the way till now, it has came from 2,800 to now 3,028, around 7.5%, 8%. But still a very crazy swing in the last 2 weeks. Things were going up and then down, right? Up and then down. Okay, a little bit of up, a little bit of up on Friday, and then yesterday it went up like 1.5 to 2%, and then today it's also going 1.5%. Right? But if we look at this, if we look at the 5-day trend, when you look at the 5-day trend, you see like a big spike up over the weekend, right? Because of Memorial Day and everyone's flying out. So the economy must be good. But near the end of yesterday, you see a huge drop, right? This drop signifies that people are starting to get worried, right? People are kind of shaky about how high the stock market is. They are shaky that it's been going up for the past like 2 weeks with very little downside. So they are expecting a crash. And what happened today? Today the stock market opened up high. It opened up like 1.5% up. But then as it continued, it started dropping. And then it went negative. It went a good amount of negative. But then for some reason, it went back up. All the way to here. So what does that mean? Of course, it's pretty common knowledge now that the stock market does not follow the economy. But I mean, just looking at the stock market, I mean, there should be patterns, right? If it is going up, it should be going down, right? And at the very beginning, like, it was going down. It was going up 1 day, 2 days, 3 days, and then went down. Then it went up 1 day, and then it went down. Then it went up 1 day, 2 days. Today's the 3rd day. Okay. Chances are, okay, I can't, obviously nothing is guaranteed, but chances are we are probably gonna have a mini correction soon. And when I say correction, I don't mean that we are going to have like a 20% drop of the S&P. No, I'm saying like, oh, it might drop around 2, 3, 4, maybe 5% within the next week and a half, because it went up around 7%. I mean, it needs to slow down, it needs to stop, it needs to pause and let go of some of its shares so that people can feel comfortable investing a bit more, because the higher the stock market goes, the scarier it gets, and people are just gonna start pulling out soon, very soon. I'm thinking tomorrow, at the very latest Friday. I do not think that the market can keep going up until Friday. I don't think the market could go up tomorrow, but definitely not Friday. Friday should be a negative day for sure. Okay, so Be very careful. Be very careful. And one way that you guys can test the stock market and see where its pulse is at is by looking at airline stocks. In my opinion, airline stocks are a good indicator of how bullish the market can be. Because if people think that the market is good and people are returning, then they would be buying airline stocks, because airline stocks is the best form of investment right now if you think that the market is going to go up. If you think that the market is going to go up, airline stocks are the way to go. Travel, leisure, airline stocks, cruise stocks, all of those stocks are the best places to go if you are bullish about the economy. But if you are not bullish about the economy, they are the first to go. And if you look at airline stocks right now, you have United Airlines. United Airlines, look at this. It went from on May 15th. On May 15th, it had a crazy rally. On May 15th, it was at $19.90, and now it's at $30. $30. United Airlines. United Airlines is currently at $30 after $20. So it went up 33% within the past 2 weeks. 33%. Okay, so that is pretty crazy. Also, if you guys are into airline stocks, if you guys take a look at some of the levels that it starts dropping off, it only goes up to around $31, $32. Okay? Right here, same thing here on April 15th, same thing again on April 29th. And what is scary to me is that just yesterday, it went up 15 to 17%, 18%. And today, it barely went up. It went up 4%. You guys look at the actual day trade today, it was negative today. It was very high at $31, $32, and then it dropped all the way to 28 something. And then it went back up again, but it's been very, very flat. It's been very, very flat. So be careful out there, because things can change very, very quickly. And if you guys are in airlines, I would try to get out by tomorrow. I try to get out by tomorrow. So good luck there. Also, and today, Boeing, oh my goodness. Boeing went up another 3% today. People are pushing Boeing stocks like crazy. And yeah, they had some good news, but their troubles are not over. Their worries are not over. In this article here, it says that Boeing job cut starts to hit 12,000 U.S. workers. So they say that more than 12,000 Boeing workers in the U.S. are set to lose their jobs in the coming weeks as cuts in the American aerospace giant takes effect. Firm says that it's informing workers of 6,666 cuts this week. No, it's actually 6,670, but it might as well have been 6,660 because 666. I mean, it's a very, very cruel way to do these things. So I would be very, very careful with that, with the economy. And lastly, the major news today is that Pompeo says Hong Kong is no longer autonomous from China, jeopardizing billions of dollars in trade. If you guys have not been paying attention to international news recently, Hong Kong has been having a lot of problems with China and how China is trying to restrict Hong Kong's freedom. Last week, Beijing introduced controversial national security legislations for Hong Kong, legislations that Pompeo again denounced in Wednesday's statement as a disastrous decision. And then he continues on by saying the State Department is required by the Hong Kong Policy Act to assess the autonomy of the territory from China. After careful study of development over the reporting period, I certified to Congress today that Hong Kong does not continue to warrant treatment under United States laws in the same manner as U.S. laws were applied to Hong Kong before 1997. So that means that America, based on all the evidence and based on all the pressure from China, America is not recognizing Hong Kong as an independent entity from China because of how hazardous it might be for foreign trade and foreign diplomatic tensions between U.S. and China. So a little bit of history. Under the one country, two system policy, Hong Kong retains limited democracy and civil liberties, and despite being under Beijing's control. The autonomous region also holds a special trade status with the U.S., which grants it certain exemptions on trade that are not enjoyed by mainland China. Okay, so how does this affect the United States? The article here states that the loss of its special status would have significant financial implications. The U.S. Consultant General in Hong Kong says it represents more than 1,200 U.S. companies doing business there. More than 800 are either regional offices or headquarters. Hong Kong was the U.S.'s 21st largest goods trading partners in 2018. According to the U.S. Census Bureau, the U.S. exported $6.36 billion in goods and imported $952 million in goods from Hong Kong in the first quarter of 2020. So the U.S. sold $6.3 billion to Hong Kong in the first quarter. First quarter of 2020, one quarter, it exported $6.36 billion. It only imported $1 billion. That is a major revenue source for Americans in the United States. And with the U.S. and China tensions still very, very heated, things could get very bad for Hong Kong. And these trade tensions, these shipments and exports, they are in a very, very difficult position. So with all that going on, with the stock market rallying like crazy, be careful out there. Be careful out there. Also, tomorrow is the weekly unemployment reports. There's a very, very good chance that we will be over 40 million people unemployed, or have filed unemployment. And it's not surprising because I think we are over 39 million. I mean, I stopped keeping track once it hit the 30 millions. So it's a lot, and it's a lot of people unemployed, and chances are that's not going to be good for the stock market. So be careful. Alright guys, so thank you so much for watching. If you guys liked the video, please give it a thumbs up. I would very much appreciate it. And if you like this content, I can make more stock market updates if you guys want. So comment down below if you guys want to see more of these videos. But until then, see you guys next time. Bye.